And a good Tuesday morning to you, live from London. This is Bloomberg Daybreak Europe. I'm Chad Thomas with your top stories. A global bond sell-off rattles markets, the U.S. 30-year yield climbing to its highest level since the financial crisis as government spending fears and inflation pressures hit sentiment. Oil prices climb for a third straight day as President Trump says he won't extend the expiring U.S. agreement with Iran, while also threatening action against Oman over the Strait of Hormuz. And Bloomberg learns that Anthropic is on track to generate annualized revenue of more than $65 billion, over 7 times its pace at the end of last year, as it prepares for that blockbuster IPO. Well, let's take a look now at what's happening across markets. Let's begin with the Brent crude. As we were saying just a minute ago, we're now at the highest in a month after President Trump signals he's in no hurry to bring the conflict with Iran to an end. 30-day Treasury yields have been extending gains, hitting a level we haven't seen since the financial crisis in 2007 over investor worries about the surging U.S. debt load. And the dollar also continuing to edge lower, a little bit up at the moment, but it's been are hovering around the lowest since May against a gauge of currencies that we track at Bloomberg. That down arrow sentiment is carrying across this morning to equity markets. Taking a look now at what we see in Asia. Asia declining this morning, even after South Korea's Kospi had been up earlier in the session after that holiday there in South Korea, but now Kospi down as well. Eurostoxx futures essentially flat, as well as we look at the risk-off backdrop due to this continued stalemate in the Middle East. Picture similar with the U.S. stocks futures, with that negative sentiment rising as oil prices weigh on investors. Now let's take a look at what we have in terms of the data points that we're following today. We'll get a check later this morning on the UK's labour market with unemployment figures coming at 7 a.m. UK time. At 10 a.m. UK, we'll be monitoring the ZEW sentiment survey out of Germany. And stateside, we've got industrial production data due at 2:15 p.m. UK time. A lot to get to this morning. Let's get started. Well, as we were saying, rising bond yields are hitting markets across the globe this morning. Let's see how things are faring in Asia with Winnie Xu in Hong Kong. Winnie.
Yeah, good morning, Chad. Well, as you mentioned, we are seeing Asian stocks, in fact, reversing those earlier losses and extending losses, reversing earlier gains earlier today and extending losses as these different macro factors really weighed on sentiment. Now we have the oil prices rising and renewed geopolitical tensions. And of course, as you mentioned, the rising yields. Now that's specifically pressuring the tech stocks in the region, given the high valuation. That's why you are seeing Japan's tech-heavy gauge, Nikkei 225 here, leading losses down by more than 2%. And of course, onshore China, we are also seeing a bit of weakness after yesterday afternoon. We had that set of economic data pointing to the overall weakness in the economy. We flip the board and take a look at how those numbers really show up. And in fact, we are seeing most of the gauges missing estimates. And this is already coming as a disappointment after the expectation was already set at pretty low levels. And we're talking about, for example, here industrial production rising just 4.5% in July year over year versus an estimate of 5%. And it is also the first time we're seeing easing in about 3 months. And similarly, when it comes to retail sales growing just at 0.6% versus an estimate of 1.5%. And also we have fixed asset investment here, missing estimate as well. So overall, you can see that outside of tech, really, we are seeing weakness everywhere in the Chinese economy. And that potentially points to the government having to step up further stimulus support. And that's why we saw the yuan, in fact, extending some gains after those data. Now, flip the board, we go back to the bond story, because that is really the key story in town today. And you did see that Asia bonds, whether it is from Australia to New Zealand or even Japan, really tracking those losses in treasuries. And of course, for the Japanese bonds, we do also have the problem when it comes to local fiscal concerns, as well as the Bank of Japan probably probably have to raise rates earlier given the weakness in the yen. And the 10-year yield here hovering around those highest levels in about 3 decades as investors continue to watch that 3% as the danger zone. And when it comes to the bright side, we are seeing a bit more positivity when it comes to the 5-year, and that is coming after a bond auction earlier today showing a strongest demand since June last year. So potentially showing how investors' appetite still is there when it comes to for the higher yields.
Bloomberg's Winnie Xu in Hong Kong. Thank you, Winnie. Oil prices continue to climb as prospects for a near-term resolution of the U.S.-Iran war recede, with President Trump ruling out extending an expiring agreement with Tehran. Trump also insists that the U.S. controls the Strait of Hormuz through its naval blockade and again floated the idea of declaring the waterway an American territory.
I just think it's a great idea, yeah. I mean, we control it. We control it with the blockade. We have a blockade. We control it with the blockade. And I like the idea of declaring it a territory.
Let's bring in Bloomberg's Abir Abu Omar in Dubai. Abir, the truce agreement between the U.S. and Iran has expired. Both sides are talking about control of the strait. Where do we go now with the talks?
Good morning, Chad. Well, technically, there are no wider talks happening between Iran and the United States, according to the latest reporting. Of course, there is tit-for-tat remarks that are happening between President Trump and Iranian officials. As you have just mentioned, President Trump saying that he doesn't want to extend that truce that technically ended yesterday. Now, Iran did say that that truce was rendered ineffective or meaningless since the U.S. had committed multiple violations of that ceasefire that was agreed in June in Switzerland. And so what we have now is these talks that we have reported multiple times over the past couple of weeks or so that are taking place between Oman and Iran. And those are essentially merely for a mechanism to reopen the Strait of Hormuz in some fashion. We still don't know what the intricacies of that deal are, essentially. And so what we have is that deal is in the final stages of being of coming to fruition. We know that it's been delayed because of the complexities, according to Iranian officials that have come out and said that it is under discussion, that it is happening to, again, in some fashion, find a pathway in the Strait of Hormuz to get a trickle of oil through the waterway. But it certainly doesn't help that we're still seeing attacks in the waterway, Chad. The latest from this morning, as a matter of fact, the UK MTO had said that an incident in the early hours of our morning here in the Middle East had resulted in a crew casualty. And this is a vessel that was struck by an unknown projectile in the Strait of Hormuz. So you're seeing these wider negotiations that are taking place or that are set to take place, a return to diplomacy perhaps. But the hostilities in the Strait of Hormuz continue to happen. The hostilities in other waterways, including the Red Sea, continue to happen, and certainly in other parts of the Middle East. So a lot of unclarity about just how soon we will return to that diplomacy.
And Abir, do we have any sense of how much oil is actually getting through the strait? Of course, there have been ships turning off their tracking devices since this conflict broke out, and it's hard to know how much is getting through. But is there any sense of the volume and if it's been changing in recent days?
Yeah, well, look, if you were to go by the words of the U.S., it's a different number from the words of what Iran says. Chris Wright, the energy secretary, did say that the U.S. military is bringing out 8 or 9 million barrels of oil per day from the region compared to 0 barrels per day for Iran. Iran refutes that and says that that's not true. And so you have a lot of estimates about just how much oil is coming out of the Strait of Hormuz. One thing is for sure, though, whatever oil is coming out is either coming out with vessels going dark, as we usually say, turning their transponders off, essentially, to be able to cross through the waterway without the threat of being hit by either the United States or Iran. And then you, of course, whatever number of oil barrels that does go through the waterway is a trickle of what it is during regular times, during pre-war times. And so this is why you're seeing Brent crude prices still getting affected by those geopolitical headlines that come out every day. It's now settling nicely above that $90 per barrel level. Again, affected by the news probably from this morning about a vessel yet again being hit in the Strait of Hormuz. But in a nutshell, Chad, the number that we're seeing of oil barrels going through the Strait of Hormuz is still nowhere near the levels that we had pre-war.
Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar. Thank you, Abir. Now to our other big story. 30-year U.S. yields have climbed to levels not seen since 2007 as concerns over government finances and elevated energy prices hit bonds across the globe. Yardeni Research has warned of investor unease over debt levels and says it's closely watching whether bond vigilantes might push the panic button. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, is there anything that can stop this upward pressure on yields?
Not in the short term. It's a vicious cycle at the moment, and things are just feeding into one another, and that's helping to push Treasury yields up there. You mentioned the 30-year yield. Well, we had an auction last week. They had to produce the highest yield in a very many years, and yet we've gone even higher again this week. We have a 20-year auction coming up for Treasuries this week, followed closely by a Japanese auction for 20-year, and those are unpopular parts of the curve. They sit somewhere between intermediates and super longs. Nobody particularly likes 20 years, so that's going to be difficult auctions. That's also weighing on what you see going on in the market today. And of course, you've got this situation where the truce, in theory, has come to an end between the US and Iran. Oil prices are very sticky. And probably more importantly for the underlying economy, we're seeing those spreads between crude, diesel, crude and gas oil. Those kind of spreads are wider and wider. You had the chart up earlier with the diesel picture there. That diesel feeds through into transportation costs, particularly in places like the United States and around the world also. And that's just going to keep inflation very high. Traders can see all of these effects going through the oil market, going back into yields, keeping pressure on central banks to raise interest rates again. Even though the Fed appears to be sitting on the fence, they've got a meeting coming up in September, and people will again be looking to them. Is there a risk that the interest rates need to go up in the United States? Even though they passed in July, they're going to have to revisit the question again in September. That's keeping investors edgy. And all of this, while we've got oil prices, the crude prices themselves, as you say, back above $90, heading towards the $100 mark, which will again set alarm bells off. It's a vicious cycle at the moment, and nobody seems to know how to break it.
Mark, how big a role is the AI story playing here? We have these tech companies raising huge sums of money, giving investors other options of where to place their money. So how is that playing into the situation with the bond market, would you say?
We've got tremendous competition for investor money at the long end of the curve especially. So if it wasn't enough that the governments, US government, European governments around the world are trying to raise finances, fiscal discipline seems to have gone out the window. So there's too much supply in the government market. And on top of that, you've got the hyperscalers issuing very large chunks of bonds. They're even going as far as Australia now. We've got Alphabet here trying to raise quite a large amount of money in the Australian market. We've seen them in Europe as well. And of course, a lot of issuance in the US dollar market as well. If you look at where credit derivative spreads are going, we saw Oracle's blow out tremendously. Nvidia is going in the same direction. That's dragging the other hyperscalers up with it as well. Investors will get very defensive. They will use the derivative market as a way to hedge against the massive amounts of issuance. That widening of spreads will start to feed back into the corporate bond market, and eventually it will pressure the whole credit space. It is something which is building up. It's not at danger levels yet. Mr. Yardeni may say he's not ready on the panic button, but he should keep it close by because it may soon be time to panic on the credit markets.
Thank you very much for those insights, Mark. Bloomberg MLive strategist Mark Cranfield joining us this morning. Well, still ahead, we'll discuss what today's UK jobs data might tell us about the outlook for the British economy. But first, Bloomberg learns Anthropic's revenue run rate has soared as speculation builds around a potential big IPO. Those details are next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Bloomberg understands that Anthropic is on track to generate annualized revenue of more than $65 billion based on its current performance. That's up more than sevenfold from its pace at the end of last year as the developer of Claude plans for a public listing as soon as this fall. Let's get more from Robert Lee, senior analyst at Bloomberg Intelligence. So, Robert, what's driving this rapid revenue growth?
Okay, well, first of all, thanks for having me on. In terms of performance, it's a two-horse race between OpenAI and Anthropic at the moment. Having said that, it's clear that the Chinese have been narrowing the gap, but the US still maintains technological, if I can get the word out, leadership. So as a result, that's driving increasing corporate adoption, particularly for Anthropic, as highlighted by the very strong revenue momentum it's experiencing at the moment. And in part, that is driven by their coding tool, Claude Code, which again is clearly demonstrating productivity savings in terms of software and code development, and again, benefiting from a strong industry uptake. So a combination of the two are really driving the top line, and that's also kicking into the bottom line. I think there was a headline yesterday, which has been repeated a few times, that Anthropic for this quarter should actually be profitable at the adjusted operating profit level. So, strong momentum, top and bottom line within the business. It's all going in the right direction, which sets them up well for a potential IPO later in the second half.
And Rob, meanwhile, we've had another deal between Nvidia and OpenAI. What more do we know about that deal?
Right. If you cast your minds back probably 2-3 years ago, there was something called Stargate that was referred to. I'm not talking about the movie, but about a combined investment scheme centered in Ohio in the States with Nvidia, OpenAI, SoftBank and others playing a part. That deal has evolved over time, whereas OpenAI and others were originally going to fund the infrastructure in it. The announcement that came out effectively is Nvidia backstopping the financial build-out of the first phase of this investment. And this first phase, in terms of capacity, will be about 4.2 gigawatts. And just to put that in context, that's enough electrical power to power around 6 million homes. So this is a gargantuan facility. Ultimately, the entire build-out could be around 8 gigawatts. So Nvidia is going to backstop that. OpenAI will lease it from them. So that's the nature of the arrangement at the moment. But the obvious sort of question and concern is, again, is this an example of circular financing within the industry, particularly with Nvidia? I think Jensen Huang did put out something overnight trying to counter those concerns, but I think that concern remains there. And in addition, whilst Nvidia remains the main infrastructure play in town at the moment, there is also an additional issue of customer concentration, because I think between once the build out starts in about 2027, 28 to completion in 2030, Nvidia stands to generate around $600 billion in revenue. That is an enormous amount of revenue, but also leads to increasing customer concentration as it remains largely dependent on this handful of US hyperscalers and OpenAI and Anthropic for growth. So, yeah, it's a positive announcement overall, but it also highlights the significant risks there are within the industry.
Thank you very much, Rob. Robert Lee from Bloomberg Intelligence. Now coming up, BHP shares gain as profit jumps at the world's biggest miner. More of our interview with the company's new chief executive next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. BHP shares gaining after the company reported full-year profit up by almost a third. Improved copper and iron ore prices helping the world's biggest mining company to beat forecasts. We asked the new CEO about BHP's portfolio and volatility in the Middle East.
For large porphyry deposits, which Escondida is one, and that's dominant in Chile, grade decline is entirely normal. You have to continue to invest year on year into these assets to continue to grow the volumes. So when you have a look at the plans we have underway currently at Escondido, we're going to be building a new concentrator. That new concentrator will allow us to more than offset the grade decline to be able to produce the copper that the world is going to need. And that's important because Escondido is the world's largest copper mine. The world in some respects depends on the success of that business, so it's important that we make those investments successful. But in addition to Escondido, we also have very attractive projects in Argentina, and with a project called Vicuña, which is a joint venture with Lundin Mining. And we also have very attractive growth options right here in Australia through Olympic Dam. So you put all of that together, and we're going to be able to put together a growth program over the next 5 years that'll lift our production in copper by 50%. And when you consider that we are already the world's largest copper producer, adding 50% to our production base over 5 years, that's pretty attractive.
You've already said that the bar for copper M&A is going to be high. Are you restless for more assets, or are you too focused on sort of execution versus more ambition?
Well, when you look at the quality of the organic pipeline we have in BHP, the copper intensity of our investments ranges between $16,000 a tonne and $30,000 a tonne. If you had to go and try and buy a pure play miner on the market today, together with a takeover premium, you'd have to pay $85,000 a tonne plus a takeover premium, so call it well over $100,000 a tonne. Relative building our own copper for $20,000 or thereabouts. So you're talking a factor of 5 to 1, which I think really showcases why the organic pathway we are choosing is so attractive to us.
It's a challenging broader environment to be doing business, particularly when you're so heavily reliant on global supply chains, right? What's been the impact of the Middle East crisis?
It's something we've watched very closely, of course, because the Middle East supplies crude products that go into refineries in Southeast Asia, which translates into diesel for companies like BHP. What we've learned is that the supply chain risks in terms of experiencing physical disruptions have actually been lower than what we expected. But how we have seen it play out is more in the pricing space. So input costs for critical commodity inputs have gone up. So diesel has gone up, the cost of ammonium nitrate has gone up, the cost of acid has gone up. So we've had to work very hard to offset those cost increases because of what's happening in the Middle East. But at this stage, we haven't seen any disruption risk to our business.
That was BHP CEO Brandon Craig speaking to Bloomberg's Heidi Stroud-Watts earlier. And now to some of the other top stories we're following this morning. President Trump says North Korean leader Kim Jong-un has responded positively to requests for talks. It comes after Trump already tested relations with a call to scale back joint military drills with Seoul. Bloomberg has learned U.S. peace envoy Jared Kushner has assured Prime Minister Benjamin Netanyahu that Israeli forces won't be compelled to withdraw from Gaza until Hamas disarms. We're told the U.S. and Israel agreed there'll be no redeployment until Hamas is fully disarmed and Gaza demilitarized, conditions Hamas is likely to reject. France is mobilizing more than 100 million euros in aid for areas devastated by this summer's wildfires. Prime Minister Sébastien Lecornu says 12 million euros will go to the hardest hit Gironde and Landes regions. The government is also waiving some taxes and social security contributions for affected businesses for 3 months. Now, coming up, UK jobs data due this morning. We'll discuss the prospects for the British economy. That is all coming up next, and this is Bloomberg. Well, a good Tuesday morning to you again, live from London. This is Bloomberg Daybreak Europe. I'm Chad Thomas with your top stories. A global bond sell-off rattles markets. The U.S. 30-year yield climbing to its highest level since the financial crisis as government spending fears and inflation pressures hit sentiment. Oil prices climb for a third straight day as President Trump says he won't extend the expiring U.S. agreement with Iran while threatening action against Oman over the Strait of Hormuz. And Bloomberg has learned that Anthropic is on track to generate annualized revenue of more than $65 billion, over 7 times its pace at the end of last year as it prepares for that blockbuster IPO. Well, let's take a look now at what's happening on the markets this morning. We're going to start with the cross-asset picture. Brent crude, as we've been saying, is now at the highest in a month after President Trump signals he's in no hurry to bring the conflict there to an end. We're at 91.58 with Brent crude this morning. 30-year Treasury yields extending gains as well, hitting levels we haven't seen since the financial crisis as investor worries about that surging U.S. debt load. The dollar up a tick this morning, but continuing to edge lower in general over the last days, dropping to the lowest since May against a gauge of currencies tracked by Bloomberg. Let's take a look at what's happening on equity markets this morning. That sentiment, that down arrow sentiment, carrying over to equity markets. The Asian markets declining this morning. They had been up a little bit earlier on, but closing or coming to the close definitely on a down arrow. Euro Stoxx futures essentially flat as well, reflecting that risk-off backdrop due to the continued stalemate in the Middle East. Picture with US Stoxx futures, very similar. That negative sentiment still in play there as the oil weighs on investors. Well, let's get more on these inflationary pressures hitting sentiment across markets with Ellie Henderson. She's an economist at Investec. Ellie, thanks for joining us this morning here on Daybreak Europe. Just want to ask you about the oil prices and the read across for inflation if we continue to see these inflated prices.
Yeah, the developments in the Middle East yesterday and overnight are certainly not ideal. It's been a war of words between Iran and the US, and we're seeing that reflected in markets this morning. As you said, Brent crude is up, Treasury yields are up, and this will start making central banks worried that actually we're not going to see oil prices come down as quickly as was first imagined. But we would say that at $91 per barrel, we are still some way below the peak we saw at the start of the Iranian crisis. We were at $120 per barrel. We're some way from that, but it's clearly not ideal.
We have the UK labour data coming out this morning. What are we expecting to see there? What are you watching for?
Yeah, so the labour market data is out at 7 a.m. this morning. Broadly, labour market data from the UK has been showing a general loosening in conditions. We expect the report this morning to continue that theme. We could actually see the unemployment rate fall slightly, but we wouldn't read too much into that. The unemployment rate is based on the LFS data, which has some issues. There's concerns about its reliability, so we look at broader, longer trends rather than the month-to-month moves, and that has shown a loosening in conditions.
And we have the inflation data coming out as well tomorrow, I believe. What are we looking for there?
Yeah, it's a busy week, and on the inflation data, I think the headline data could look a bit alarming. We think that headline inflation will tick up 0.3 percentage points to 2.9%, but that is already baked into the pie, so to speak, in terms of the central bank, the Bank of England. It knew it was coming because we had a 13% rise in the Ofgem energy price cap, and that feeds directly into the CPI numbers. So what the Bank of England's probably looking at is not so much headline inflation, but core inflation, which strips out food and energy, and that shows how underlying price pressures are evolving and whether this oil shock is moving further beyond the energy space.
And if we continue to see these oil prices at the levels that we're at, or they rise further, what does that mean then for the inflation picture here going forward?
Well, in the UK, you get inflation from two first stages. First, you'll feel it at prices at the pump when you're filling your car up. That's an immediate effect. And then there's a lagged effect in terms of household utility bills, which are defined by the Ofgem energy price cap. So you would see a fuel impact if prices continue to rise. But the question is, does that then show up in other sectors of the economy and price pressures elsewhere? And the Bank of England would certainly want to guard if there's signs of that.
It looks like a rate cut is priced in at this point for the Bank of England in its next meeting. What are your expectations in terms of how things will play out further?
So we think the Bank of England will hold at the next meeting. We think there might be some pressure for a further lift in rates from some members on the committee, given these inflationary concerns. However, we think the majority will want to stay put, because the labour market is loose, so there's less pressures from wage growth, and policy is already restrictive, so it's already doing some of the work combating these inflationary pressures. But it's likely to be a close call, especially if the situation in Iran doesn't move in the right direction.
And there's a report out from Lloyd's this morning looking at AI and the impact of AI on British business. And the majority of businesses were saying that they actually have been hiring people because of AI. How do you view that?
That was really encouraging to see, because of course there's so many concerns out there that AI will replace jobs and there'll be mass unemployment from it. And the fact that we're actually seeing some evidence now that actually AI is prompting hiring is certainly a good thing for the UK economy, especially when we are seeing the labour market loosening.
We have European PMIs coming at the very end of the week. It looks like there might be a positive uptick there. What is your view on how that is likely to play out?
The PMIs are always super interesting because it's sort of our first look of activity. It's a very early estimate. We get the PMIs for August. We think there's going to be a little bit of cautious optimism. Hopefully, when the survey was taken, the situation in Iran maybe was looking a little bit better, but there's still a lot of issues. You've got supply disruptions from the Middle East, but also because of drought levels in the Rhine, for example, in Europe have caused shipping disruptions. The Panama Canal is also suffering difficulties. So we expect that also to play up in the report. And we really like to look at the narrative of the report to see what businesses are really saying.
You were mentioning the Rhine levels, the Danube levels are also really low.
Yeah.
How does that read across then to the economy when you're not able to transport goods on these major waterways? And of course, you have the issues with the nuclear reactors in several locations as well.
Well, ultimately, it raises shipping costs, which in a world where inflation is already quite high, that's particularly problematic, and central banks, I'm sure, will be looking at it closely. We've got a little bit of a break before the next sort of central bank meetings, but I'm sure when we get there, this will be a prominent theme, and I'm sure there'll be some analysis done about how shipping levels and the issues in the Danube will really affect the global economy.
And as we were saying, there's a lot of data coming this week. We have the minutes from the FOMC as well. What will you be looking for there in terms of when we get those minutes?
So I was actually on your programme the day after the last Fed meeting, and we talked about how the financial market reaction showed that maybe it was a bit of a thumbs down to the new communication strategy from the chair. So we're hoping for a bit more colour on the FOMC's thinking in these minutes. And then what we look for after that is the Jackson Hole Economic Symposium, which is next week, where Chair Walsh is speaking. Typically, we do get some policy signal at these speeches. He said that he wants to focus on long-term trends, but given some of the criticism over the last press conference, we wonder if we will get some near-term policy signal as well.
And also, when we're looking at that data and parsing what it all means, where do you think we stand now on a rate cut from the Fed this year? Do we think that there's any likelihood that there will be one?
We think the Fed will hold steady this year. It's a close call. We probably don't think rate cuts are coming until next year, but I think the debate is, will some members push for a rate hike given the inflationary impact that we're seeing from the Middle East? The numbers haven't been so fantastic as of late because of this oil price shock. And you've also had labour market dynamics in the States, although the latest payroll report did show that jobs were lost in the US. So it is likely that that will help the case to hold steady for now.
And of course, I meant to say a hike, not a cut there. Thank you, Ellie, so much for joining us this morning. Thanks to Investec economist Ellie Henderson, and all things, including the BOE there, which is, to clarify again, is expected to hike at its next meeting, not a cut. A little too early for me this morning. Coming up, the Iran war has redrawn Africa's fuel trade and handed Vitol a powerful position across the continent. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Vitol, the world's largest oil trading house, has turned the Hormuz crisis to its advantage in a little watch corner of the global commodities market. That's the story covered in detail on the terminal today in our big take. Bloomberg's Jack Farchi joins us now with more on this. Jack, how did Vitol benefit from the Hormuz closure?
Thanks very much for having me. This is a story really about how since the war in Iran began, Vitol, the world's largest commodity trading house, has become extremely dominant in East and Southern Africa. So, for example, we've got shipping data that show in the month of July alone that Vitol accounted for over 40% of diesel shipments to the region. And across the region in a number of different countries, the countries have signed exclusive deals, largely outside of normal tendering processes, to be supplied over a period of, in most cases, several months by suppliers from Vitol.
And Jack, what have these deals meant for countries like Tanzania and Namibia?
So we've spoken to government officials in all the countries we've named, and almost all of them say, that we were facing a massive energy crisis. We were worried about the possibility of fuel shortages, and the deals that they've done, either directly or indirectly, with Vitol have prevented fuel shortages, have meant that their countries have continued to be supplied. On the other hand, our analysis shows that in many cases these deals are extremely expensive, and in some instances the contracts have been amended in ways that ended up benefiting Vitol. I would say I've spent quite a lot of time looking at this story. I would say it's really hard to say definitively the price of this deal is wrong, and obviously these deals were agreed at a time of great disruption in the markets. But that's exactly the reason why organizations like the IMF push for countries to do transparent and competitive tenders, so that you can see all the different offers from all the different competing suppliers. And in almost all of the cases that we've written about in this story, these deals were done outside of ordinary transparent tender processes.
And what has been Vitol's response to all of this?
Vitol says that it's won these deals. It's supplying more of Africa because it was able to offer secure supplies and security of supply at a time when other suppliers weren't, when supplies from the Middle East, which the region is very reliant on, were disrupted. And so it's been able to, it is the world's largest oil trading house for sure. It trades something like 8 million barrels a day of oil and oil products, which is enough to supply the entire continent of Africa and also the UK and France on top. And it says it used its financial and logistical heft to ensure supplies to Africa at a very difficult time.
Bloomberg's Jack Farchi. Jack, thanks so much. A very interesting read. Our big take this morning on the Bloomberg terminal and online as well. Now, Frasers Group has snapped up Harvey Nichols out of insolvency, adding one of Britain's most historic brands in a prime flagship location in Knightsbridge to Mike Ashley's growing property empire. Let's get more on this from Maddie Parker, our Bloomberg consumer reporter. Maddie, thanks so much for joining us this morning here in the studio. Talk to me a little bit about what is playing out here.
Yeah, it's a really interesting acquisition for Frasers Group. As you know, they were founded by Mike Ashley, and they made their fortune really selling cheap sportswear. That's kind of where they made all their cash through their business Sports Direct. But over the years, they've become a very acquisitive retail group. So they brought brands like Jack Wills, Evan Cycles, Flannels, which is their luxury push. And actually, the Harvey Nichols acquisition kind of fits into a broader theme here, which is Frasers pushing to kind of the higher end of the market. So they now have stakes in British luxury brands like Burberry, Mulberry. They're looking for a takeover of Hugo Boss at the moment. And so Harvey Nichols is really interesting, right? Because they also, kind of this is what our piece looks at today, have developed this big property empire alongside it. So when they've been acquiring all these retailers, they've also been acquiring a lot of their real estate underneath, but they've also had a push into shopping centres, retail parks, outlets, and we've discovered that they're kind of in the same leagues really as some of the institutional landlords in the UK. So the Harvey Nichols acquisition is very interesting. They kind of ended up being the only horse in the race by the end of it. Next, which is another group, were also in the running, but we really think this is kind of a jewel in the crown of their empire at the moment. As you say, the Knightsbridge store, 200,000 square feet, so it really adds to their empire.
I mean, department stores is a tough business. So what do they think that they see and can do here to sort of turn this around? And also, as you say, now they have this really big property empire that they've built as well.
Yeah, definitely. I mean, department stores have gone through kind of years of difficulty, really. I mean, the kind of fall of physical shopping, the rise of online, the pandemic was really difficult for department stores. And one thing that Frasers always look for is a deal, is a bit of a bargain. And they have discovered, obviously, Harvey Nichols had a bit of a heyday back in the 1990s. It was a favourite of Princess Diana, of people like that. And kind of the years of decline since have kind of made it a much more appealing acquisition for Frasers. Now, the question is really where they'll take it from here. So there's some inclination that they'll keep the London flagship store and the Edinburgh store maybe running as Harvey Nichols. There are kind of 6 or so other regional stores which they might convert to Flannels, which is their kind of luxury outlet. But it'll be really interesting to see kind of where they move forward with it.
Is the idea then that they also bring in some of these other brands that they own or have an interest in, and there's some synergies that come out of that?
Yeah, definitely. I mean, it's kind of their approach in a lot of these shopping centres they've acquired, and we spoke to a lot of letting agents who kind of dealt with Frasers, and they say, listen, they buy a lot of these sites, they'll bring in the kind of sports directs, they'll bring in Flannels, and it's quite handy for them to kind of have anchor tenants that are actually some of their own brands, because they can keep an eye on them as landlords, but also they understand it as retailers. So I suspect that might be the move. I think for some of the kind of regional stores, they might make them kind of standalone Flannel stores, which is kind of part of their luxury move. But I think that'll probably be their move going forwards.
Maddie, so good to have you here in the studio. Maddie's story is on the Bloomberg Terminal this morning as our priority feature, and you can also, of course, read it online as well. Now to some corporate news. Fast fashion retailer Shein is said to be targeting a valuation of up to $27 billion in its initial public offering in Hong Kong. That's below an earlier target of $30 billion. Sources tell Bloomberg the company will seek to raise about $2 billion, with existing shareholders possibly taking up about half of the offering. Meta heads to court today in a high-stakes trial over claims it deliberately designed Facebook and Instagram to encourage compulsive use among young people. Attorneys general from 29 states are seeking financial penalties and changes to how Meta operates its platforms. Meta says potential penalties could theoretically reach $1.4 trillion, a figure close to the company's entire market valuation. Meta denies the state's allegations and accuses them of seeking an outlandish payout. European banks, including ING and Santander, are providing £300 million of backing to expand an existing data center in Scotland and build another. Dell will also move its Scottish headquarters to the site. The investment marks a key sign of life for Britain's so-called AI growth zones under new Prime Minister Andy Burnham. Bloomberg understands Mark Walter, the chief executive and founder of Guggenheim Partners, has explored selling his stake in Chelsea FC to Clearlake Capital, the majority owner of the London-based football club. Last week, Walter's holding company TWG Global agreed to sell the Lakers to Josh Kushner and Bob Iger for a record-breaking $12.5 billion as he tries to clean up loans on his insurer's balance sheet. The FT reports, meantime, that billionaire Todd Boehly is also in talks to sell his Chelsea stake to Clearlake. Well, there's plenty more to come up. We'll be taking a look at some of our favorite charts this morning. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just want to clarify again our earlier conversation on the rate outlook for central banks. The BOE is expected to hold at its next meeting, but is expected to raise rates by the end of the year, while the Fed is expected to raise over the coming several meetings. All right, now let's take a look at the charts out this morning. We want to begin with a chart that we're looking at the rising 30-year yields on treasuries despite interest rates coming down. One of the main drivers of those higher yields is the fiscal picture in the U.S., with the U.S. continuing to spend $2 trillion more than it brings in every year. And while Scott Bessent, the Treasury Secretary, is trying to keep those yields down on the longer-term debt by selling more shorter-term notes, the sheer volume of this debt pile has made that task quite difficult for them. All right, let's flip the board, and we can see that foreign holders of U.S. debt are reducing their exposure. In June, Japan, the UK, and China all reduced their Treasury holdings with fewer prospective buyers. Of course, that complicates Scott Bessent's job even further to sell bonds and keep those yields down. All right, let's flip the chart again. Now, our third chart is taking a look this morning at the stock of the big U.S. tech spenders that has been recovering, as you can see, from that July sell-off. One driving factor in all of this, of course, is the huge sums that they're spending on the AI build-out. And that is another factor, of course, weighing on U.S. bonds, because many investors are opting to buy these tech bonds where they can get an even higher yield than if they were buying treasuries. Now, to access, search, and save all the Bloomberg Terminal charts used on this show and across Bloomberg TV, Terminal subscribers can use the function CHRT TV Go. And now some key data points coming up today. We'll get a check on the UK's labour market with employment figures at 7 a.m. UK time, just at the top of the hour here. At 10 a.m. UK, we'll be monitoring the ZEW sentiment survey for Germany. And stateside, we've got industrial production data due at 2:15 p.m. UK. And later today, we'll hear from the Bank of Israel Governor Amir Yaron. Don't miss that conversation on open interest at 3:40 p.m. UK. The opening trade is coming up next with Guy, Skylar, and Tom. And they, of course, will be looking at those UK data figures coming out at the top of the hour. This is Bloomberg.